Good day, everybody. This is David Mallock from MPW Chartered Professional Accountants here in Reese's Corners. I've been working in the area of taxation since 1991 and have been a chartered professional accountant or a chartered accountant for over 13 of those years. The government has announced a series of changes on tax law. So if you own a small business, if you employ members of your family in a small business, if you have invested any assets into a corporation, this video is of significant importance to you and you should pay attention. This is the first in our mini-series on the taxation changes and proposed taxation changes by the Liberal government. The next video will be on integration, and then we will dive into details of each individual area in which they wish to attend. I would like to state right at the onset, we're all for tax fairness. We are not against it. By everybody paying their fair share of tax, nobody is left holding an exuberant amount of the share. However, it is because of the fairness that we feel it is our obligation to address these issues. We understand that there is a need to close loopholes in order to create a fair system. We are not purporting ourselves to be experts on this particular legislation. In fact, all of us at MPW have fairly busy schedules, and we do not feel that we've been given adequate amount of time to research or comment on the 159 pages that were put out by the government by October 2nd. This video is not to be construed as tax advice. So let's get into what happened. On July 18th, 2017, the federal government of Canada released a paper presenting sweeping changes to the Canadian tax system, stating their intention is to close loopholes for the rich, to make our tax system fair, and to tax the top 1% of Canadians. So they propose to do it. They have three measures that they find to have been offensive. The first is income sprinkling. Currently, laws exist regarding income sprinkling. They want to make them more encumbrant, inclusive. They're going to set up, now the rules apply to children that are minors under the age of 18. There will be 3 classes under the new system, so it'll get more complex. There's those under 18, those 18 to 24, and those from 25 and older. And they all have different sets of rules, so it makes things done, and it is a little prejudice based on age. They also hope to curb the use of the lifetime capital gains exemptions from any assets that have been held by a minor or a trust, including testamentary trusts. These are also offensive. They're looking at passive income. The premise is that the Canadian small business corporate tax rate is lower than the personal tax rate. Therefore, a small business owner would have more money available after tax to invest in a passive investment than an individual. I agree that that is true. However, it is necessary for a stable business to have some money available for downturns, for cycle turns. There's a lot of reasons for acquisitions of new properties for growth that could be affected by this legislation. As well, the means by which they have proposed to attack the passive income, I find to be the most unfair and scariest of all of the proposals. The elimination of the refundable taxation on hand and the capital dividend account are the fundamentals of a fair and well-integrated tax system. The even mere thought of eliminating these things is so very offensive to me. It is the main reason that we need to stand up. We need to be heard. The last area of concern is capital gains conversion, and they're worried about capital gains having a taxation rate of 50%, being significantly less than that of other incomes that you could receive from your business, such as a dividend. And they're worried about using family members to convert these dividends into capital gains. The government is stating that these changes are in the interest of fairness. We find this statement to be false, misleading, and the white paper to be somewhat offensive to all small business owners, as it implies that all small business owners cheat on their taxes. The proposals that have been made will not only affect those people that are actually cheating, but they will affect every single bona fide transaction out there that has any sort of element that it could be associated with cheating. The government states that they're going after the top 1% of Canadians, the wealthiest of Canadians. In my professional opinion, the wealthiest of Canadians are using overseas tax credits and overseas rules to get their money offshore to avoid taxes, and not through the Canadian system that exists today. However, they mentioned they may go after these people. They might go after it in a future date, but they're attacking middle-class America right now. Canada. The top 1% of the population, or even the top end of the bracket of small business owners, are likely to be less affected by this than those in the lower end. The people that are making adequate monies and earning significant earnings will employ counsel to help them navigate through the complexities of the new situation. Those that are in the lower end, the smaller business owners that are earning 30, 40,000 and need every single bit just to survive, that are putting everything into this business, those people, they're the ones that are going to fall short on documentation. They're the ones that are going to be missing on tracking. They are the ones that are going to be susceptible to most of these measures, specifically subjective measures that are being enacted by our government. So the system is not going after the wealthiest of Canadians. We dispute that right off the bat. It is actually hitting middle class Canada hard. I have over 300 clients that are small business owners. The vast majority of them are not earning $220,000, $400,000, $500,000. They are regular, hardworking, dedicated Canadians who work between 2,000 and 4,000 hours a year to keep their businesses going. Their families are involved from a very early age, helping the businesses grow, often without compensation at all. Small business owners are not the 1%. They are the middle class Canadians. Small businesses are the backbone of our economy, and the proposed changes will make it difficult to understand why anyone would want to invest in a corporation in Canada if fully enacted. Small business owners take on great personal risk in order to get their businesses going. According to a Government of Canada website, in 2015, small businesses, those with less than 100 employees, provided 70.5% of the workforce. Yet these are the people that we are attacking. Changes to the capital dividend rules will affect transactions that have been in place for years. 20, 30 years ago, you made a decision to do something, and now you're going to have to pay a significant additional tax to deal with that. We do not find that fair at all. The nature of this request we found to be misleading. The legislation is already drafted. For the income splitting, the legislation is drafted, and we have to be very specific in our recommendations. For passive income, it appears that they're still looking for comment, and I really urge you, if you have any sort of passive income, portfolio investments, rental property, leases, solar income, that you contact your MPP and tell them that you cannot handle the additional burden of taxation on these things. The window that they gave us to input decisions is too small for the complexity and the size of the material that they put out. All of this does not make it sound like a government seeking for input from its constituents, but rather propaganda, advertising the forced changes that they're going to impose upon the Canadian people. Let me read you the first paragraph of their executive summary. The Government of Canada is working to create a healthy and growing economy where businesses can create meaningful, well-paying jobs, strengthen the middle class, and ensure that Canadians have confidence in their future. Essential to that confidence is knowing that the government is working to ensure that everyone is paying their fair share of tax and that tax rules are being followed as they were intended. Confidence is fundamental to the tax system in our economy. This is why fairness is a part of the government's long-term plan to create jobs and grow the new economy. Confidence and fairness. Apparently, it is fair that someone, a multimillionaire who was earning $500,000 of income in a year, can pay a lesser rate of tax on certain passive incomes that he earns personally than a business owner who earns $30,000 to $40,000 a year in the lowest tax bracket would have to pay on that same income. That's apparently fair. Fair is taking away 25% of someone's retirement because 30 years ago they decided to put monies into a corporation, to put their assets into a corporation rather than run them privately. Now they're subject to a significant additional tax should the removal of the CDA and RDTOH be enacted. That is fair, apparently. It is not fair. So what can you do? Well, I would urge you to read the white paper and our talking point paper that's on our website. Go to our website, Facebook, or YouTube channel and watch the rest of the video series. Follow us. Call your MP. Email your MP. Email some local Liberal MPs and let them know how these changes will affect you and that you're not the top 1% of Canada. Remember, everything can be found on our webpage, mpw.ca. This is David Malloch saying goodbye.